This voice is taken from an article with the title, How Does Economic Growth Affect Currency Values?, which has been published on TraderTalks.net. The value of a currency is determined by a number of factors, including economic growth. Economic growth is the increase in the amount of goods and services produced by an economy over time. When an economy is growing, its currency will generally increase, say in value relative to other currencies. The primary factor that affects a currency's value when economic growth is occurring is the level of demand for that currency. As economic growth increases, domestic demand for goods and services increases. This increased demand leads to an increase in the amount of imports from other countries, which requires those countries to purchase the domestic currency in order to pay for the imports. This increased demand for the domestic currency increases its value relative to other currencies. In addition, when economic growth is occurring, the domestic economy is likely to be more attractive to foreign investors. Foreign investors will purchase the domestic currency in order to take advantage of potential investment opportunities, which also increases demand for the currency and increases its value. Finally, when economic growth is occurring, central banks may adjust their monetary policy to address inflationary pressures. Central banks typically increase interest rates to slow down economic growth, which may lead to a decrease in the value of the domestic currency relative to other currencies. In summary, when economic growth is occurring, the value of a currency is affected by the level of demand for that currency, the attractiveness of the domestic economy to foreign investors, and the monetary policy decisions of the central bank. When economic growth is strong, the currency is likely to increase in value relative to other currencies.